morning. It's Brian Paragamian, senior trader as well as co-founder of ProfessionalStockTraderLive.com, bringing to you Thursday evening's update for January 22nd. Well, the first thing we're going to look at is, we'll actually just make mention that Google is up on the day here right now in aftermarket activity after reporting better than expected earnings. So we'll leave it at that. You can see the stock is trading up $7. Hopefully that'll have a positive impact on the stock market tomorrow. The first thing we're going to look at is Baxter International. We're going to add that to our investment ideas list, as you can see here. The reason we're doing this is you can see the earnings growth they've had from 2007 to 2008. 2007 they earned $279, 2008 $338, 2009 they're guiding $370 to $378. So that's over 10% growth, right around 10%. And the fourth quarter, they just reported here today, they beat by 2 cents. So with the 10% growth they're looking for, along with a dividend of 1.9%, and the stock breaking a downtrend of 5 months, we like this stock because of all these reasons. And we believe it's undervalued at these prices, and we're looking to get long the stock. Now, ideally, we'd like to buy the stock on the 20 and 50-day moving average, which comes in right here at this 54 area. And we're not quite so sure that it's gonna get back down to here, but we're hoping it does. We're going to, though, be a buyer in the 55 plus minus area. That's about all we think we can get on it. If even that, we'll have to wait and see how things transpire. But as you can see here, it broke out slightly above this little horizontal resistance area. It broke the downtrend line going back 5 months here today on the earnings. The other thing we like about this is you can just see here how it's got higher lows all the way throughout. And again, that's something we have talked about many times. It's got higher highs now all the way throughout. So that's a positive on this stock. We like the fundamentals. We like the story behind it. We like the technicals. We think it's a stock that one should look at getting long if this is in an area that they like. Having said that, let's move on to another chart, and let's look at the Dow Transportation and the Dow Jones Industrial Average. And we've talked about this for several days now, but we're going to continue talking about it. We want to keep our eye on the lows of 29.09 for warning signs. Of course, we never got down that low today. You can see we closed at, on the Dow Transports, 30.32, down only 29 points. They performed well today. There was some news that came out that was positive for the transportation stocks mid-session, so that's why we saw a rebound in the stock market. But we're turning more bullish here on a very short-term, or cautiously bullish, should we say. We're starting to see, you know, as we see here, we've held this 8,000 roughly, 8,000, call it 7,900 to 8,000 area here the last 3 days. And what we're hoping we're going to see happen is we're hoping we're going to break this out of this downtrend here that's been around for the last week and a half here or so, 2 weeks we're working on. So we're hoping that's going to resolve itself to the upside rather than a breakdown. And we think that's what's going to happen, and that's exactly why we got long the DDM today, David Mary. We got long the DDM. We've got stops below the market, and as we said, we're cautiously optimistic here with the market being as oversold as it is. We're looking for the market to break out of this downtrend and have it rally back up into this 8,500 area for starters. At that point, we'll reassess things and take it from there. Moving on, we're going to take a look at another chart that we did look at yesterday, and we're going to point this out again, and it is the bond market chart, the U.S. 30 Treasury, as well as the TBT, which is the inverse relationship of the Treasury. And we talked about this here several days ago, how we thought the bond was ready to break down, and it has broken down. As you can see, it broke down below its 50-day moving average here. And on this bar here, you can see it well below breaking. It was down significantly again today, trading slightly below the 130 level. And on this chart here, you can see how this is starting to break out to the upside as well. Now, you can see the bond itself broke down below the 50-day moving average, which is the white line right here on this bar. But you've got the the TBT, which is the inverse, just approached the 50-day today. So you can also now see how the 20-day is starting to hook up nicely here. So on any rally back in the bond market, which would give us a decline in the TBT here, we're going to look to get long. And ideally, we'd like to see a rally back into this down or into this 20-day moving average, which is starting to hook over very sharply. We'd like to see a rally back into it, get shorted, and put a long position on the TBT, which would be being bearish the bond market, which we think the bond market is turning into a bear. We think it's played itself out. There's not much value being long the Treasury, and we think that these are the beginning signs of things to come for the stock market, good things to come. As the bond market continues to break, we think that's going to lend support to the stock market. And the other thing we're going to talk about right now is we're going to look at the gold futures, and we're going to look at the market vectors gold miners, the GDX, which we got long here today as well, and we have stops below the market at 30. And taking a look at this chart, you can see are illustrated by these purple trend lines that we broke down from a wedge formation several weeks back, and we landed right on the 50-day moving average, which is this white line here, and since then we've rallied back up. Now we've kind of developed a little more shorter-term wedge formation here, illustrated by the yellow lines, and what we'd like to now see, and we're anticipating a break above these trend lines, this wedge formation, and that's precisely why we got long the GDX. Now the GDX kind of illustrates the same thing here. It came back into some support in the 27.5 area, as you can see by this yellow line. And it also bounced up off the 50-day moving average, and now it's starting to move up and through the 20-day, which is the blue line, the blue moving average line here. And this here also now has a wedge formation as well. So we think once it starts taking out this 32.15 area, the stock, or the ETF, let's call it, is going to accelerate to the upside. And we think the same here as we start taking out this 864 area on the upside in gold, it's going to start really accelerating its move to the upside. And we're anticipating this happening. That's why we've gotten along the GDX. And you can see here, gold closed at 856.70, so we're not too far above where we need to be for the breakout to take place. And remember now, on all the positions we take, we use stops. Stops are very, very important in things we preach here at Professional Stock Trader Live. Without stops, you're trading incorrectly. Stops are essential. It takes all the emotion out of trading. So if you're not using stops, we urge you to use stops because that's one of the most important things in being a successful trader and really a successful investor. So I'm not going to go on giving you any more preaching or any more discussion on that. And we would like for you to join us in the morning and watch our live webcast if you're available. We've got a lot of great things we talk about, very informative. We take your questions. So if you have time, we welcome you to stop in tomorrow morning at 8:20 and join us. And if you don't, we hope you enjoy our nightly updates and our alerts that we send out for swing trades. Thanks for listening, and we will see you in the morning at 8:20, and have a good evening.